for one of those companies. Let's talk some Adobe. It's time for Cash Tags. Let's welcome in our guest, TD Ameritrade Network contributor Jenny Horn here in studio, and joining us from LikeFolio.com, the VP of Research, Megan Brantley. Good morning to both of you. Jenny, as I said, we're talking some Adobe here, a NASDAQ name, a stock that's up a bit this morning on the heels of kind of the comeback in tech. But this is a big cloud company and one that has earnings.
Absolutely. So earnings today, like you said, mentioned after the market close. But what sort of separates Adobe apart that I find super interesting is often with these cloud names, we sort of lump them all together. But Adobe really operates in this sort of creative space, which separates it from, say, these other cloud powerhouses like an Oracle or a Workday. Now, Adobe has a really strong focus on specifically its digital media business, which is expected to boost its top line in the second quarter. Their digital media revenue is actually expected to grow to $2.7 billion from $2.2 billion a year ago. And their creative annualized recurring revenue is expected to almost double sequentially. So these are very strong areas of growth for Adobe. And specifically, it's seeing actually strong growth in their Premiere segment and also their After Effects segment, which if you've ever used these programs, they're sort of, one in their own in this space. Now, there also is a focus on education when it comes to Adobe, because Adobe is sort of focused on building out this degree of stickiness, meaning that if you've ever used Adobe products, they're not exactly simple to use. So once you've become familiar with, say, Adobe Photoshop, you're more likely to continue using Adobe Photoshop and not learn another program because you spent the time, of course, then learning it. But really, the company's expansive portfolio of all these different software solutions appeals to these different collaborative and more creative minds, which sort of, I again think makes it unique in this cloud space. Now, like you mentioned, Alex, it has sort of witnessed this degree of rebound in tech. It's up about 15% in the last 30 days, and has actually gotten a ton of noise on social media, more than I would have actually thought. So that brings me to our first tweet of the day, which says, Adobe at highs, digital adoption driving demand, but based on my experience, 1, Adobe's subscription billing seems onerous, leaving a bad taste, and 2, cost-conscious creators may increasingly opt for easy-to-use alternatives like Canva. We have reduced our spending on Adobe. And our next tweeter today actually was in response to this tweet, which I thought made a pretty good point, which said, the valuations are already discounting a substantial growth in free cash flow, which on the back of a recent 25% 3-year compound annual growth rate is luring in growth seekers. To put this in context, both Adobe and Intel have almost similar EVs, but the free cash flow is substantially different, $5 billion versus $80 billion. So, Megan, what I'm curious is, because obviously both of these tweets are some degree of negative, is if your purchase intent data is reflecting this, because the noise was not exactly as positive as I would have thought on Adobe this morning.
Yeah, so whenever Adobe is an interesting beast to tackle, because there's so many different brands, as you talked about, a lot of their video editing, a lot of their document management software, and even the experience management. So in terms of like advertisers actually placing ads in front of consumers. So there are a lot of different ways that people could be talking about Adobe. And for the most part, it's pretty positive in regard to sentiment. It's about 81% positive. It's actually improved about 2 points. So those that do use Adobe are typically pretty happy with it. But as you mentioned, this purchase intent that we listen for, so mentions of people who are signing up for Adobe, really learning this program, those are starting to show a little bit of relative weakness. So whenever we look at that, I think it's pacing down around 45% year over year. Now, it's important to note there was a really robust adoption last year whenever people were, remote working more and really shifting to this digital mindset, digitizing business efforts. And Adobe was right there and waiting to capture these new users. And so now we're seeing a little bit of a slowdown. We're seeing this pretty consistently across the Document Cloud and the Creative Cloud element. So this is just something we're watching ahead of earnings. This doesn't necessarily mean that users are fleeing Adobe. They do have this subscription model. So you've got to think about this in some regard to this pull forward, all of that growth that you saw last year. A lot of those users are likely sticking around, and that's pretty much what we're measuring right here on this chart. These are these cancellation mentions, and you can see that those are actually falling and have fallen about 8% year over year. So you've got kind of two things that we're watching heading into earnings. You've got a slowdown in new user growth, which isn't necessarily a positive thing for the company. However, you do have signs that these users that they previously acquired are sticking around. I think it will really come down to, what do people latch onto more? Is this new user growth, slowed to a point that this retention, this subscription-based model can't make up for it? So we'll see, but that's really what we're keying into.
Megan, this is one of those LikeFolio data points that is kind of counterintuitive, isn't it? Because your subscription cancellation mentions down is a good number, right?
Yes.
Year over year, cancellations are down 8%, which means more people are staying with Adobe, correct? So what looks like down 8% year over year, but it's cancellations that are down 8%, right? So that's actually a good sticky part of Adobe's business model.
Yeah, you're exactly right. So you want to see these cancellation mentions fall. If you're Adobe, you want that retention because subscriptions are so important. I think that subscriptions comprise like 92% of their revenue last quarter. So this is a piece of the pie that they're growing and they want to keep consumers around. One thing that we do notice in tweets is that it's really hard to cancel your Adobe subscription, which I guess depending on who you are, if you're the person trying to cancel, that may make you upset. But if you're an investor, you like that it's really difficult for Adobe to purge consumers. Because to cancel, I think if you cancel before 14 days, you're good. But after that, you're going to pay a pretty significant lump sum. So you might as well stick around. And what we find is that when people do stick around, they typically like the software. So I think that this cancellation metric, yes, Kevin, as you point out, it's a good sign. This is one of the positive things that we're watching heading into earnings.
Okay, yes, Megan, I have fallen victim to trying to cancel my Adobe subscription, and it is not easy. It's very true. It's like you have to sign up for multiple months, and you're already stuck with multiple months, so you're like, forget it, I'll just keep it. But I'm curious, when people do cancel their Adobe subscriptions, where are they going? Are they just no longer using the Creative Suite, or is there a strong competitor you all see that is maybe stealing market share from Adobe?
You know, it's interesting. I think that one thing that we are watching is Canva. I don't think that it's really a fair apples to apples compare just because of how sophisticated the Adobe software is. But there's definitely the potential for competition to spring up for Adobe. But right now in our coverage universe, we don't even have a clear competitor that we can plot on one of the outlier grids like we like to bring to you guys sometime to show, this is how Adobe is performing versus peers, because there's really not a clear, distinct alternative for Adobe. You might be able to piecemeal off a couple of its services, but as a comprehensive unit, Adobe has such a unique just value prop to consumers. I know that there are certain things that I do in daily tasks that I can only do with Adobe. So I think that that's a really strong defense that the company has going for it, but it definitely needs to continue to innovate. One thing that we're watching alongside that is this increased, mobile application adoption. This is something where Adobe's trying to make its products easier to use for consumers. So remove a little bit of that learning curve, which I think is really smart long term, because at the end of the day, you want more consumers onboarding onto your products. But just as the negative side of this heading into earnings, that new user growth is slowing down. So this is definitely something to monitor and something that we'll be watching for. Are people turning elsewhere? So we'll see.
So Megan, as we kind of tie this all together, I think Jenny's question was a strong one. I think that's one of the primary questions whenever you're talking some of these tech firms is where are the competitors? And so with there not being really a formidable competitor at this time, and Adobe in many ways having kind of that clear path to growth that we've seen over the past few years, it's become more of a mature company. It's found a different way to kind of annualize that revenue. It's really that focus on its transition from buy the products to a subscriber-based model has been well accepted by the street. So Megan, my question to you is now, as we analyze this data and we think about Adobe as it transitions maybe from a growth company to more of maybe even, let's say, a blue chip type of company, and we might not be there, but at $260 billion for a market cap, are we more concerned now with cancellation mentions than we are growth rate?
Right now, for us heading into earnings, we really are seeing a steep decline in that growth rate. So that's levels not even just lower than 2020, but lower than 2019. So because of that, our earnings signal just for this event is leaning a little bit bearish. I think it's at about a -24, and that's typically on a scale from negative to 100 to a positive 100. So I'll let you, this is a slightly bearish earnings signal. We think that they're going to post strong report based on these, retention rates that we're witnessing, based on consumer happiness. However, this may already be priced in. And so this is one that we are, if we're going to take a position heading into earnings, we're probably playing it risk defined to the downside. But long term, we do like this company. This is one of our highest when it comes to consumer happiness. I think whenever you compare versus, for example, a Microsoft, its happiness is like more than 12 points higher. People love to use Adobe's products. I don't think you could necessarily say that for all other products. And so again, long term, we really like this, but short term, the expectations may be a little bit too high.
Yeah, it's 2 days off all-time highs, so I would say the bar is set pretty high here, Megan, but a great breakdown as always, and thanks for joining us, the VP of Research at LikeFolio.com. And Jenny, that